I have a $158,000 account at Robinhood that is dedicated to two income strategies: selling options premium and collecting interest. So here's what I do in this account. I sell cash secured puts and covered calls, mostly on ETFs, and I also collect 5% interest on the uninvested cash with Robinhood Gold. In January, I made $594 in options premium and $500 in interest. That was a decent start to the year, but how did I do last month, the month of February? Well, I only closed 5 options in February, and I sold 3 others that are still open. And on an unrelated note, I also have a new microphone. So if this is sounding good, give this video a thumbs up. And now let's check out the action for February and see how much premium and interest I earned. My first trade was a leftover from last month. It was this covered call on TLT. I have 100 shares of TLT, and I'd like them to be called away actually, but I've been reluctantly hanging on to these shares for many months going back to the middle of last year. Now in January, I sold a $99 covered call on these shares for a 25-cent credit, and in February, I rolled that call out to March 15th and up a strike price to the $100 strike price for an additional 42 cents of credit. The $100 strike is at that nice round number that just seems easier to roll out as needed. And even though I want these shares to be called away, I continue to ride this ETF through ups and downs in interest rates, and I'm just doing my best to continue to collect a little premium along the way. And then the next trade on my list was with QQQ, and this actually happened, snuck this one in the last day of the month on January. The Qs were down, and I sold a cash secured put on QQQ with a February 23rd expiration date. I sold one of those for $2.32 credit, and on the same day, I sold something very similar, another cash secured put on QQQ, but this one expiring out on March 15th. So the first one I sold, that was at a 20 delta. The second one was at a 28 delta. I think I sold the first one, and then maybe the Qs went down even further and I sold another one, but further dated. So in the first cash secured put, I received the $2.32 of credit. And then the second one, I received $4.85 of credit. So pretty juicy there. I ended up buying them both to close only 2 days later on February 2nd. First one, I closed it for 98 cents. And then the second one I closed for $2.54. And that gave me a profit of $134 on the first one and $231 on the second one. And the annualized return on capital on those was 60% on the first one and 104% on the second one. So both of those turned into very nice short trades, only 2 days in the trade, and a pretty nice profit for only 2 days. All right, the next trade was IWM. On February 2nd, I sold a cash secured put at the 188 strike price, set to expire on February 23rd. I sold that for $1.70 in credit. And as I noted here, IWM on that day was the only index down where the others were up, and just seemed like an opportunity to go ahead and sell a cash secured put, and ended up closing it 6 days later for $1, and that netted me $70. That was a 22.65% annualized return on capital, 26 delta. And the theme continued because just a few days later on the 5th, I did something very similar, sold another cash secured put, this one at the 182 strike price. This was set to expire on March 15th. Sold this one for $2.25 credit and bought to close it only 1 day later for $1.75. And that netted me a quick $50 in profit, 100% annualized return on capital. And one reason I sold this cash secured put was in relation to the previous one, that if both ended up getting assigned, it would have brought down my average down to 185 instead of 188. And I ended up, after I sold this second one, I put in a buy to close order in case it got down to $1.75 on the same day, and it turned out that it did. And I bought to close at $1.75 and netted that $50 credit. That was a 100% annualized return on capital. And then on February 13th, another IWM trade, another cash secured put on IWM. This time at the 185 strike price, I sold this cash secured put for $1.35 in credit. IWM was down that day, bought it back, bought to close at 74 cents, because once it got down to 74 cents credit, I would have been better off just keeping the cash that I was using to secure the put, just keeping it as cash that could earn 5% at Robinhood, and I would have earned just as much. So that was that break-even analysis where once it got down to 74 cents credit, I decided it might as well buy to close, because at that point I'm earning just as much on my cash at 5% with Robinhood Gold. So it's like, there's no sense in keeping the cash secured put on, keeping that risk on, when I could just earn 5% risk free. All right, the next trade was on February 15th, this time with Apple. I sold the cash secured put on Apple at the 175 strike price. That was set to expire on March 28th. Sold that for $1.90 credit. And then the next day I did I actually did the identical cash secured put. I did another one, same expiration date of March 28th. Another cash secured put at the 175 strike price, but this time I got a little more credit. I got $2.10 credit, and this is nice because the $1.90 credit from the first one and the $2.10 credit from the second one is a nice even average credit received amount of $2. So between the two, I averaged $2 credit received. And those two are still open. Immediately after I sold these, I put in a good to close order of 70 cents, because once the price gets down to 70 cents, just like in the IWM example, I would be better off earning 5% on that cash, just completely risk-free in Robinhood Gold, instead of using it to secure this cash secured put with only 70 cents left in the trade. But these puts have not gotten down to 70 cents yet. They've bounced around, and right now I still have them open, so we will see what happens in March. So in total, I closed $546 in premium within the month of February. So very similar to last month, about $50 less is all. I continue to not be very aggressive at all with selling cash secured puts while the market continues to rip. I'm just not seeing many opportunities right now. And then on the interest side of things, I earned $467.73 in interest, a little less than last month. I had more cash tied up for longer in these Apple puts. So yeah, there's this interesting trade-off and calculation I have to do, because Robinhood doesn't pay interest on cash used to secure puts. So by selling cash secured puts, it means I have less cash in the account earning interest. It's unfortunate, but that's just the way it works at Robinhood, because to earn the 5%, they actually sweep that money out to partner banks. So if you're using that cash to secure a put, it can't also earn interest. Some other brokerages, such as Fidelity, may allow you to earn interest on the cash you use for a cash secured put, but not at Robinhood. Just something to be aware of. So if you add what I made from selling options to what I made from interest, that's around $1,014 this month. And I transferred $540 of that out of Robinhood into my checking account this month, which represents most of the options income that I received. In an effort to keep this account slowly growing, I'm keeping the interest earned in the account for now, but I'm transferring any premium I receive and close for that month, I'm transferring that out to my checking account. And that's it for February. It looked a lot like January. Hopefully March will be a little more exciting, but in a good way. But as the market rips higher, that's actually a good thing for the majority of my invested assets, which are in total market buy and hold strategies. So it's okay that my option selling strategies aren't setting the world on fire right now. It's an ongoing experiment, and I enjoy it because I get to do something actively with my investments, and yet it's actually more conservative than buy and hold. And if you combine this income with what I'm earning from my other side income experiment, which is this YouTube channel, that's another $320 this month that earned. So things are starting to happen, and I'm getting more of a feel of how I could generate income outside of my buy and hold portfolio once I retire early. And if you want to learn how to retire early, or if you want to go back and see my January options trades, check out one of these two videos here.